From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
G'day, welcome to the COB. I'm Nadine Blaney. Great to be here with you on this Monday afternoon. We are the 12th of August and we are in reporting season. I think it's safe to say it's official. I'll get you across all you need to know. But it is a busy week as far as data goes, not just here with the wages and jobs data later in the week, but also with inflation in the United States. We get a data dump coming from China. Also, U.S. earnings continue to come through. Really interesting. I was reading a note from RBC Capital Markets earlier today, and they were really, after that bout of volatility, listening into the calls in the United States, so the conference calls following results, because they thought that in the wake of that, there might have been a toning down of some of the positivity in terms of the outlook. But they said they're seeing no indication that caution has crept into the communications coming from U.S. corporates in any meaningful way, even after the big market fall that we saw last week. That's just one of the things I'll be talking about with my guest host, Josh Gilbert. He's joining us from eToro shortly. But let's get across just where we're sitting in terms of the market. So we're up by about 0.5%. So we've seen momentum continuing on this Monday here locally. And as I mentioned, around the region, most Asian markets are higher. Japan is actually on a holiday. So boy, this time last week, quite a different story. Results, I mentioned, we're in the thick of earnings season now. Today's not by far the busiest day, but we got a taste of it, didn't we, with JB HiFi, Car Group, as well as Aurizon. Now, JB HiFi has been leading the 200 all day, special dividend of 80 cents, and some momentum in the July sales data. Speaking of data, I mentioned that we are data dependent this week with inflation in the United States. We've got expectations for a cut coming through there in September, but, potentially even a 50 basis point cut if we continue to see the data slowing down. Here locally, we did hear from the RBA today, and it really, to me, just seemed like it was a continuation of the narrative, not ruling anything in, not ruling anything out. Data could go either way. No certainty really in the outlook for what's expected here locally. And we have the RBNZ. We are expecting to see a hike come through on Wednesday. Let's get across some of the sectors of the day today, and tech did rule the roost in a good way. We saw the likes of WiseTech Global making good gains. WiseTech up by 2%, NextDC up by 3%. NextDC makes me think of Goodman Group these days, and don't forget we do have Goodman Group reporting on Wednesday. It'll be really interesting to see what they say about growing that side of the business. Now, Megaport is up by 2.7%, Dicker Data putting on 5%. Then we get into the retailers, and as I mentioned, JB HiFi was the best performer on the 200, but I dare say it lifted some of these other boats with it, including Harvey Norman, which was up by 4.3%. Lovisa, down at the bottom of your screen, up by 2%. We do hear from Telstra, on Wednesday reporting. We've got Telstra into positive territory today. Aussie Broadband up by about 2%. So here we go. I'll just quickly get you across the details before we get some analysis. JB HiFi declared a special dividend, better than expected profit, pointing to higher sales in July. Beach Energy was one of the negative stories from reporting season. It tumbled after a big downgrade at its new gas field in Southeast Australia, also posting a net loss for the year of $475.3 million. Still sticking with reporting season, and Aurizon dropped after it posted soft FY25 guidance. Also, posted a share buyback of up to $150 million, 25% rise in annual net profit to $406 million. I spoke with the CEO, Andrew Harding. That is up online, along with all of our reporting season coverage, ausbiz.com.au. Car Group spoke with Cameron McIntyre, the CEO there. Shares up by 4.4% by the end of the day. Consensus is it was a pretty solid result, at least from the early broker commentary coming through. Let's not wait any longer, shall we? Let's go to Josh Gilbert. He's joining us from eToro. Hey, Josh, welcome. Any thoughts on any of those corporate reports coming through today? I mean, JB HiFi, you can't sort of look past that one when we are continually told that consumers are doing it tough.
Yeah, that I think is the main one of the day. Obviously, the best performer on the ASX 200, as you sort of mentioned there, Nadine, as well. And I think you really hit the nail on the head right there in terms of what we hear from about the consumer, and we obviously look at those consumer confidence surveys as well, and it's a case, I think right now, of the consumer sort of saying one thing and then ultimately doing another, because we obviously do see that those results are pessimistic, but we're also then seeing that they're continuing to spend. And that's coming at a time when obviously the RBA last week left rates on hold for its sort of sixth consecutive meeting. Maybe those sort of July numbers are sort of seeing some improvement because we had those tax cuts come through. Maybe that was a bit of a move to allow people to sort of free up some discretionary cash. Maybe they were using that capital when it came free to, feel a little bit more open to go and spend on electronics. Ultimately, if we think about everyday life and how important tech is, AI, all of these types of things are massively important. So it's also a bit of a cultural thing these days as well. We all want the best technology and no one wants to sort of be left behind in that sense. So again, better than expected, really, a really solid result with that dividend number coming through as well. That sort of, I think, has really going to please shareholders, and the market would have liked that July number, which is why I think we've seen such a positive reaction today. And they just continue to sort of remain resilient despite what this expectation is of weakness coming through. We're just sort of yet to see it. So
yeah, it's pretty incredible, to be honest, because it's been such a market darling, trading around record highs, but we will take it at face value. Which I might jump around here a little bit, because it brings me to what we're expecting in the US in terms of reporting season. Not only do we get a retail sales read in terms of data, but we do hear from the likes of Home Depot, I think, and I think Walmart's this week as well. I mean, this is going to be so interesting. Again, a litmus test when it comes to the consumer.
Absolutely, yeah. And obviously we're coming off what has been, the tail end now really of what has been a good earnings season in the US. We've got that sort of double-digit earnings growth. It's been better than expected. So we've, now getting a good read into the consumer with these names. And it's also coming at a time where, we are sort of getting these, recession bells being sort of rung a little bit. And obviously we're going to get US inflation and retail sales data all at the same time. So I think you mentioned right at the top there about sort of that RBC Capital note, which was sort of looking at those conference calls to sort of see if there was a change, in any commentary. And I guess that maybe would have, come through when we heard about those, recession calls after that sort of jobs number. But I think the retailers may have, a good look into that. Their guidance is obviously going to be sort of a real focus on that retail sales number. We're not expecting much from that retail sales number. I would expect us to sort of see a similar number to last month, pretty steady, nothing too big there. That inflation data is probably going to be the big one in terms of sort of maybe looking into when that cut may come. But in terms of those retailers, that's going to really give us a good look into that consumer. And, I think we're probably going to get the same, resilience is what we've sort of seen so far across the board. And as I say, it's really going to be a nice early test as to what we can expect moving forward over the sort of the last 6 months of the year in the US for the retailers. Okay,
so Josh, unemployment here locally. It's a volatile read at the best of times, but it could really set a cat amongst the pigeons, no, when it comes to expectations for interest rates here in Australia, because the jobs market would be the penny dropping in terms of what may, force the next move from the RBA.
Well, yeah, and I think we saw that really in the US, didn't we? I think that gave us a good understanding that there's a real fine line between cooling the labour market and sparking those sort of serious concerns of a slowdown. And so far, I think that the unemployment and employment numbers, as you say, have been heavily volatile. Last month, we had that employment number that was better than expected, sort of better job gains than many had expected, but then unemployment rose to sort of 4.1% at the same time. So again, a real fine line, because the RBA obviously want to see unemployment rise, but slowly, but they also want to see those job gains, not coming in as hot as, sort of we had last month. And I think the RBA's decision to obviously leave rates on hold sort of, really shows that their case is sort of dwindling to sort of raise rates any further because, of what we seen in the US as well. If we push too far on rates, we're ultimately going to get to the point where unemployment is going to potentially move higher than they had expected to, and they'll lose the gains that they've made in the jobs market. So I think it's going to be a really important number. You spoke as well about what we heard from the RBA today as well, from the speakers there. And I think this is a sort of similar tone that we had from what we've heard from Jerome Powell in the past. Although there's a very clear sign that we are getting closer towards that idea of a cut. A cut this year is obviously still very optimistic, although markets still believe that we might get one by the end of the year. We're probably still at about a 70 to 80% chance of that. They're not going to sort of give anything away, because I think if they do, markets will ultimately take a mile. But this employment number is going to be, really important. It's obviously that first number that we get since the sort of inflation decision as well. But we are starting to see, a clear cooling. Jobs ads are falling, and the number of people applying for those jobs is also increasing at the same time. So there's a clear sign that we are starting to see that cooling, but it needs to sort of maybe be reflected slightly more in the data, because as you say, it's been very volatile so far.
All right, so that's the data. Now we know what to expect this week. Can we go back to results? Because Josh, this week's huge here locally. Even tomorrow, we get CSL. Wednesday, we get CBA. I mean, these are some of the biggest companies on the bourse. We get Cochlear this week as well. So where's your focus, and where do you think focus for eToro clients are tomorrow?
Yeah, a bit of a bumper lineup, as you say, sort of really straight into it this week with, CBA. And again, CBA is probably going to be the standout in the sense of just it's the market mover, right? It's the name that probably is going to move the ASX, depending on if we sort of get an outsized move. And looking at the market today in terms of expectations, only looking at about maybe a 1 to 2% move. But if we do get a disappointing result either way, that could, heavily affect it. Expecting dividends to sort of stay the same with CBA, but I think we're going to be looking at obviously cost is going to be really important. Net interest margins are always really the focus there, and then commentary, I think, as well, in terms of debts. If we're sort of really seeing any weakness on that side, cash has been sort of good so far, so not seeing a huge amount of weakness on that side. If we see a change in commentary, that may put them on the back foot a little bit, but again, that has the ability to move that financial sector, so really keeping a close eye on that. CSL, I think, will be, for us, I think a focus in terms of it's had a really strong run, and I think the expectation is pretty high, and therefore it's going to need to sort of deliver, and we're going to obviously then focus on guidance and all of that. So again, if it doesn't deliver, and I think the reaction is what we're going to be looking at from that sense, because if it doesn't and it's an outsized move, then I think we can expect the same with other names, and it will just go to show very similar to what we've seen in the US this time around. The expectation is very high, and if we look at some of those numbers coming from the biggest names in the US, they were actually pretty good in most cases. Really, if we looked at the tech, it was the capex numbers that sort of disappointed the market, but it just showed that you had to be close to perfect. I think we'll get that with those big names that have run up pretty far. So, run up pretty well so far. CSL, CBA all had a really good run as of late. So again, big expectations. So got to deliver there. So I think those two, as you say, are probably going to be the standout. And those are two companies that are well owned on the eToro platform as well. We also have a look into the sort of the energy sector as well. We've got AGL and Aurizon, again, two stocks that are also pretty well owned. And there's been a bit of relief to the consumer recently with those energy cuts sort of coming in as well. So it'll be interesting to see how their earnings sort of measure up against one another, as well as energy bills, as we know, have continued to sort of rise over the last 12 months.
Yeah, got it. Well, they've got some of my money, I can tell you that much. All right, Josh, thank you so much for joining us today. Appreciate it.
Pleasure. Thanks, Nadine. Have a great week.
You too. Josh Gilbert from eToro. Boy, just talking about that week made me feel a little bit tired, but we've got some great reporting season coverage up online. We spoke with the Car Group's CEO, Cameron McIntyre. We spoke with Andrew Harding. Also from Aurizon, we spoke with the fund manager of the Dexus Convenience REIT. And so you can find all of that coverage online, ausbiz.com.au. And the big bonus, of course, is that we get analysis of some of those results with our roster of expert guests. And you can find all that by heading to the website. All right, let's get some more on JB HiFi. It was the stock of the day. Nathan Samasundaram from Deep Data Analytics and Ben Clark from TMS Capital.
I'm not as doomsday as a lot of people in terms of the pain out there. I think the more results I'm seeing, and car sales is another one I point to today, that the good companies are bucking the trend, and they're finding.
So would you be buying JB HiFi at these levels?
No, it's a hold at these levels. It's a great business. It's actually probably even a bit of a skim, I'd say, at these levels.
So take profits.
Take a bit of money off it, but
Yeah, it's a cyclical stock.
Right.
This is retail. I don't care how good you are, you're a cyclical.
Right.
Take your money, go somewhere else. Cyclical into, we're worried about US recession. If US goes, it drags everyone else. We're slow global growth, Australia gets affected. I think consumers, we're at probably close to the peak. Whether it lasts another couple of months or not is a side issue. We don't know when things start to crumble.
So there you go. Take some profits out of that market darling, JB HiFi. It certainly was the darling of the market today. Led the 200 throughout the session in terms of share price performance. Looks like we had a bit of change in leadership while I was discussing things with Josh. Yeah, Tabcorp. What is going on, Tabcorp, pray tell? Up by 10%. Be looking into that one. Bellevue Gold as well. It's got Macquarie listing it as outperform. And Car Group up by 4.4%. Tabcorp, I got to check when it's reporting. Beach Energy was a big disappointment today. Not just its impairment, which was flagged to the market, but also it's downgraded its reserves. That's not good. Aurizon was, down by close to 9%. Interesting because it did announce a special or an on-market buyback. The dividend was increased, it made its guidance, but it was the weak outlook. Well, what was categorized as a weak outlook? I spoke with the CEO, he didn't see it as such. Regardless, Strike Energy, Red 5, and Mineral Resources. The market's never wrong, is it? In the smaller end of the market, we've got some good moves being made by these companies on your screen. Legacy Iron Ore up by 14%. Some of the laggards, though. And we've got Actinogen Medical down by 56%. Now, what are we going to have on the agenda through the overnight period? We get inflation expectations coming from the Cleveland Fed. And I believe that is in the US, where we get a federal budget balance, which would make for really terrible reading. You've got to think, huge debt and deficit there. The big news, though, here today was RBA Deputy Governor Hauser. There's some great coverage in the AFR about his speech. You can read all of the RBA's prepared notes on the RBA website. By the way, if you're interested, Hauser was having a bit of a shot at us for, I guess not us specifically, but just, in general at some commentators, some economists, those that speak with a lot of certainty about what the RBA should do. He's saying, step back. A lot of uncertainty around there. Mind your manners. Interesting. Okay, here tomorrow we get the Consumer Confidence Index, we get a wage price index, and we get a lot of results. So CSL, Challenger, Charter Hall, Lifestyle Communities, NetWealth, Seek, Temple & Webster, which incidentally is one of RBC Capital Markets' top picks in the small cap space, Yancoal Australia, and Region Group earnings. So busy. All right, let's see how this market closed. And we were higher, in fact, by about close to 0.5%. So that's the COB Australia Index. The S&P ASX 200 closed at 7,813. Just looking at E-minis in the States, we're now watching the NASDAQ E-minis up by about 12 points, while still a little bit of pressure coming through on S&P 500 E-minis. And in China, markets are negative, but the KOSPI in South Korea has closed about a percentage point higher. That is the show or the podcast for today. Thanks for watching throughout. And if you've missed anything, you can catch up on ausbiz.com.au. In the meantime, we look forward to seeing you at 9:45 when we're live once again tomorrow.